Welcome to a trade recap, a very quick, short, systematic, straight to the point, very clear setup here today. I did take this on a demo account, so for anybody who's wondering, we're currently trading demo for a few more weeks before we go live. And to backtest and understand the trading method a little better and see its consistency. So today we had a really nice move down, and in the morning we were looking at a 15-minute inversion as well as more on the 5-minute bearish fair value gaps, which we took to the downside. You're looking at two trades here. The first one is a very good lesson on impulsive entries, and the second one was a more systematic following the rules based on entry, which, as you can see, hit our profit target, a nice 3.23R, and having an overall trade with the loss included, looking at a $200 to $300. So we're gonna go over the live trade today, but just key important events here. Number one, getting in too early before the trade confirmation was seen on this lower high, and then you see the doji here at the 15-minute inversion, and then on top of that, the retest of the 5-minute bearish fair value gap. But we'll learn all about this in today's live recap. So enjoy. Make sure to like, make sure to subscribe. Follow me on Twitter. I post there way more than I post on YouTube. Okay, just taking a look here. This inversion over here on the 15-minute, very important. I want to take a look at possible R to R here. Just scheming, just playing around with it, making sure my orders are good. Usually I trade two contracts. The price is breaking in. There's a tiny fair value gap here on the 1 minute that inverted, a bearish inversion, which means that's bullish at this point. But I don't think it's going to stand. Going to get in here and just place my stop loss above that recent high just before the drop. Again, I'm expecting the 15-minute to hold a lot stronger than the 1 minute. Okay, so it's coming up, but you see it rejecting here. This might have been a little early, because what I'm thinking is where's the character confirmation of the 15-minute inversion? This could be it. This could be it. Let's see. So first trade stopped out. So at this point, we're just gonna wait and see what price shows. We have a few more 5-minute bearish gaps here. So these points I'm highlighting because they could also be the turning point, especially since we're in the 15-minute inversion. All right, we're gonna try to see if we can get in here. Seems like we're pushing down. Oh, we'll see. We'll wait a little longer. The liquidity point up there. The price is reacting well over here. We're trying to push down. There's a doji involved. So I'm just getting ready for a second position, this time nearing that high. So if it goes above that high, I don't want to be in this position anyway. That will invalidate my short thesis. So I'm just gonna wait, see what's price doing. Not trying to push buttons, especially after that first trade here. Not trying to push it. Probably just get in here because we have a lower high, right? We are respecting the 15-minute inversion, which is the main trade thesis here. This could be the move that we were looking for in the first trade. It did grab liquidity as well on the first push down. And systematically, we're going to target the next liquidity point below us. And we're going to see how it plays out here. Just a lot of chop here, but still haven't filled this liquidity target at the bottom. Seems like now we're going for it. First trade was good, but not good, because I should have waited for the 2-minute doji here, or at least some sort of more of a reversal price action, or at least waited to see if it clears this liquidity up here and then reverses. So got in later, but yeah, it's a good reminder to always wait for confirmation before you get in. Still have this liquidity target at the bottom. We do have a gap all the way from September 16th of September 2024. A part of me wants to reach for this, but you know, systematically I want to reach for the most probable target, which is going to be the liquidity coming up here at the 19766 level here. We're just gonna wait for that. Just relaxed, wait for it. This is the 1 hour. So I primarily take a look at the 1 hour and the 15-minute. That's how I base my trades off of. And then I look at the lower time frames, which is the 5, 2, and 1 minute, just to see price action and entry execution. I have another screen above me, so that's where I'm usually looking. So you're not gonna see much action on this screen. It's because I'm looking at the screen above me, which let me just show you. It actually looks like this. It's just another 2 screens, the 1 hour and then you have the 15-minute, because that's where the fair value gaps really play to my strategy, and that's most effective. At this point, I could also do something like this. You know, you want to place your stops where it makes sense, not with price necessarily. All right, profit target hit. So the trade plan worked out, right? In the very beginning, we saw our 15-minute inversion, right? So 15-minute inversion gaps that we were waiting to see it come up and then take this liquidity point right here. It could go lower, but I'm not gonna push it that hard. The issue was the first trade was a little bit impulsive. I'm not gonna lie. Okay, I saw a kind of pushing down. I'm like, oh, okay, well, maybe it's gonna go down. But it's important to notice that there was a liquidity point up here, which I should have just waited to see price reacting to this point right here. Let me make it blue so you see it, instead of just trying to get in. Because look, it just tapped a liquidity pool. We're in a 5-minute bearish fair value gap here, right, within a 15-minute inversion. So that's like a short bias on top of a short bias, and then rejection right after we hit this liquidity target is another short bias, and then you have this little bad boy right here, this doji pattern at a point of interest like this, where you have an inversion, you have a negative fair value gap, you have a liquidity sweep right here, is very good confirmation. That's actually the reason I got into the next trade, the next candle, because I saw this. So first trade, a little impulsive, should just avoid that and just continue to wait for this doji confirmation, maybe the price action to kind of form out here. You know, the other thing is this impulsiveness is, you know, I could even say getting into here was a little impulsive, you know, because what you could have done, or what I could have done rather, is wait for it to come down here. So here's where I would say the trade idea takes place, right? Here's a doji at a specific point. We're like, hey, this is a short bias confirmation on our 15-minute and then 5-minute as well. We're seeing this happen. And then the entry, you could have taken this right here, right? Here's a 5-minute bearish fair value gap. So if we go back to the 5-minute here, fair value gap right here, right? So a lot of people could say, you know, this fair value gap was mitigated from what I've seen price action do, is if you notice a fair value gap, this one. Okay, we're talking about this fair value gap right here. Okay, this one. So if you break up and close, is this immediately an inversion? I wouldn't say so, because there are fake outs, which I've seen price action do. So you break, and then immediately the next candle in that same time frame that you see that fair value gap immediately comes down. So this is still bearish, right? That's what I've seen personally through price action. So you can't just, oh well, it broke, it's immediately bullish now because it's a inversion, bearish inversion, 5 minute. But then what you see here is it's still respected as a bearish fair value gap. You came all the way down, right? So this is the downtrend right here. And then let me get, so you come all the way down, and then you came up, retested the fair value gap, rejection, double rejection. That's it for price action traders, that you could count that as a very micro double top. And then you slump down. So that would be the second distribution, I would say. Second delivery, second stage delivery. And then you could just enter here. Good trade. This was a 3.2R for 39 ticks. That's not too bad, right? Lost 144 ticks on the first one though. So wait for confirmation. Wait for the light bulb to go off. Light bulb goes off after certain things come into play. We have a lower high, right? Which is another point. And then a doji, lower high and a doji is at a POI, at a point of interest, like these fair value gaps. I'm looking to take a short. I'm short biased. Very powerful. Well, that was Monday, and it's just 10 o'clock. This is all arbitrary numbers here because I've been demo trading. So I will still continue to demo trade for a few more days and then go live with a small account, maybe $2,000-$3,000. As you can see, we're still slumping down here. Right, here you go, 2 minute bearish fair value gap confirmation here. Respected this one. This is 2 minute minus. Came right up to here and then went all the way down. It could go all the way down to the gap. I wouldn't be surprised considering what the market has been doing and the kind of volatility that we've seen recently, the kind of range we've seen. It could definitely come down to here, at least this major liquidity target within the gap. But again, I'm not going to push it just yet. I want to focus on my base hits, focus on that systematic execution, and from there I'll grow the live account, and then in the future maybe we leave some runners and see what's going on, right? But it's important to understand your system and its base hits instead of always trying to reach for the farthest profitability target, because that's when greed comes in, right? And then where do you really put a stop loss, or do you want to really handle that? Experience is important, so base hits are also super important. So no rush. That's the most important thing about trading. There's no rush to it. I expect to be here a million years from now, so why the rush now? You know what I mean? So we're just gonna relax, have a good time, have some tea. Morning tea, I tell you, nothing like it. Another important thing that I've learned is for anybody over trading or who have this need to make money. I gotta make money. I gotta push trades. I gotta click a button, because trading is like I gotta do something every day. You don't need to. And if you have a hard time being impulsive like that or over trading, literally just close it off and then move on with your day. Something that really helped me is I created another Windows account to just trade. I have my personal Windows account. That's where I watch YouTube and do all that stuff, but I created another account where that's where I can only trade from, right? This is where I have access to my trading view. This is where I have access to TradeZilla and everything like that. So when I log out of here, see it's moving down, but if you feel impulsive to take this trade right here, right, and you struggle with that, just literally close it off. It's okay. You'll be here tomorrow. You know how to trade. This is something I'll talk about in the future that I've really understood, is if you have a fear of missing out, it really truly comes from the fact, your internal fear of thinking that you don't know how to trade. And maybe that it is true. Maybe you don't have a system that you can believe in, that you've tested enough to know. So your brain keeps thinking, oh, we don't know how to trade, so we got to take the move right now. Otherwise we'll miss it. And that's obviously really bad, because at that point you're desperate and not actually trading. You don't want to trade like that. Instead, what you want to remind yourself when you feel that is, I'll be here, I know how to trade, there's no rush, and I don't have to take this risk. I do know how to trade. The more you tell yourself that, the more your brain will stop being so impulsive and stop taking all these FOMO trades. Okay, well, thanks for joining on Monday. I will see you guys tomorrow. Just close it off. Just like that.